Hey guys, what's up? Alec back with the daily stock market, and look at that. We had a red day in the stock market on Friday. SoFi was down huge, and lots of other banking stocks, with some banking stocks down 20%. Now, we're not going to talk too much about Silvergate Capital in this video because we talked about them in the last video. So in this video, what we're going to talk about is give a comprehensive update to earnings week going on this week, and it's starting to die down a little bit on Monday. Really not much going on, just BuzzFeed, Turtle Beach, Getty Images. Tuesday before the open, not much either. Tuesday after the close, we have skills reporting, which is going to be a good one to play for earnings. In the close friends list, we're going to be taking some calls or options out on that one. So Wednesday before the open, we have Oatly reporting, which is a plant-based food company. All right, Wednesday after the close, we have Adobe, we have UiPath, Grow Generation. So those couple are going to be good ones to also be playing for earnings. Pretty easy to predict where they're going to be, where their earnings are going to be going this quarter. Now, Thursday before the open, we have Dollar General, Blue Apron, and then after the close, we have a really big one with FedEx reporting after the close on Thursday. So that's going to be a very scrutinized earnings announcement, especially with supply chain issues all year long in 2022, and now we're starting to see it let up a little bit. Friday before the open, we have Xping, which is going to be another very, very interesting stock to be following this week. So make sure you subscribe with post notifications on, and if you're not on the close friends list or the Discord, you're definitely missing out on easy money every single day, with students making 300% gains, hundreds and hundreds of dollars being made every single day by students. $2,500 here, another 222%, another $1,800 gain, another $200 gain, and the list goes on and on. So if you want to make sure you're securing these easy W's and following my trades, make sure you message me on Instagram to be a part of it. Here we see another 33% gain, sold, thanks Alec, and so on and so forth. Now, I know we said that we weren't going to talk about Silicon Valley Bank too much or Silvergate Capital because we talked about them in the last video, but there was a quick update that I do want to go over that just happened this weekend, and earnings week is pretty short this week anyway. So here we see Yellen rules out bailout for Silicon Valley Bank. We're not going to do that again, okay? This is the Treasury Secretary, Janet Yellen of the Federal Reserve, said Sunday that the federal government will not provide a bailout for Silicon Valley Bank, and obviously Silvergate Capital also. And she just said this Sunday, which is today, after the bank was abruptly shuttered, but said financial regulators are concerned about the impact to depositors and are working to address their needs. During the financial crisis, there were investors and owners of large banks that were bailed out, Yellen said in an interview with the Face of the Nation on Sunday, and the reforms that have been put in place means that we're not going to do that again. But we are concerned about the depositors and are focused on trying to meet their needs. Okay, so obviously that's just a can of worms they don't want to open. And if they do bail out this bank, that shows that the federal government is willing to step in again and bail out. If they bailed out Silicon Valley Bank, then they're going to have to bail out thousands of other banks as well. And remember, this California Silicon Valley Bank was the 16th largest bank before its failure. The Federal Deposit Insurance Corporation, FDIC, was appointed receiver, and regulators are working to find a buyer for the institution. See this article that the FDIC is ready to pounce on and we see that the FDIC is ready to pounce on SVB after the financial collapse. Watch these stocks. Okay, so the stock market suffered big losses last week after SIVB and crypto bank Silvergate Financial SI triggered intense losses for banking stocks. West Coast financials such as First Bank Republic and Western Alliance Bank Corp were especially hit hard, but Signature Bank and Charles Schwab were big losers too. JPM, however, did find a support on Friday. The major indexes sold off hard as well, like the S&P 500, breaking multiple areas of support during the week, as many of the other leading stocks came under pressure as well, like, Apple, Google, Tesla. Treasury yields plunged with the pace of the Fed rate hike very much in flux. Admin, a weak, volatile, uncertain market. Investors should not be making any new position trades and instead be largely or entirely in cash. So there could be a huge buying opportunity for long-term investors in the next couple weeks or the next few months. Palo Alto Networks, Facebook parent company Meta, Ulta Beauty, Power Systems, and United Airlines are 5 stocks showing strength right now near buying points. Pan W stock has formed a handle on the long consolidation, while Meta stock has a new flat base. Alta stock is finding support at key levels, and we also see Monolithic Power is working on a long cup and handle base, while UAL stock has retreated from the buy zone. Meanwhile, we see that Apple has a new flat base as well. Tesla sold off hard this past week, but did not find its 10-week line on Friday. Tesla stock is far from being actionable, and it can continue to sell off. So definitely keep that in mind during this week of trading. So let's talk a little bit more about earnings specific. Here's a stock that's reporting later on in the week, Adobe, ticker symbol ADBE. As we look ahead, 2023 Q1 season, one thing is sure, the 2022 Q4 season wasn't nearly as bad or as feared. Many companies posted better than expected results, helping to keep the market afloat. However, there's still some notable quarterly prints or results that still have to be announced coming soon, including that from Adobe and FedEx. Adobe is one of the biggest software companies in the world, generating the bulk of its revenue via licensing fees from its customers. How does the company stack up ahead of its quarterly results, quarterly earnings, quarterly print? Let's take a closer look. The key metrics to watch out for: investors should keep tabs on critical metrics. The company's subscription revenue, the number one thing to be watching. For this quarter, the Zacks consensus estimate for subscription revenue stands firm at $4.3 billion, indicating a positive change of more than 10% year over year, which is a good thing to be hearing, before their earnings are coming. Adobe has consistently exceeded expectations within this metric, as seen as the chart below. So we can see that they are consistently beating on net revenue subscriptions, which is a great thing for a beat on an earnings call this week. However, the share performance, if we dive a little bit deeper, Adobe shares have experienced roller coaster price action from 2023. So far, up a marginal 0.5% and underperforming relative to the S&P 500. And over the last 6 months, the story has remained the same, with Adobe shares underperforming relative to the S&P 500, which could imply that it is due for a pump or a gain, stock price going up pretty soon. Quarterly estimates: analysts have been silent for the quarter to be reported, with 0 earning estimate revisions hitting the tape over for the last several months. The Zacks consensus EPS estimate of $3.66 indicates an improvement of 8% year over year and shows that they're a very profitable company as well. Our consensus revenue estimate stands at $4.6 billion, climbing 8% year over year. So their revenue should be up 8% year over year. The EPS should also be up 8% year over year. Quarterly performance on Adobe spots a stellar earnings track record in the past, exceeding both earnings and revenue estimates in 10 consecutive quarters, back to back to back to back, 10 times in a row. Double beats every time. Just in the latest release, the tech giant delivered a 3% bottom line beat and a reported revenue modestly above expectations, which was the latest quarter, the last quarter. Below is a chart illustrating the company's revenue on a quarterly basis. So you can see that revenue is just climbing, which is a great thing to see for a company that you want to be owning and also doing a call option on for earnings. Putting everything together, Adobe shares have underperformed relative to the S&P 500 across several time frames, but remain marginally in the green year to date. And I guarantee you, if you look at the S&P 500, they're revenue on average isn't increasing as much as something like Adobe. So the fundamentals could also be pointing to a rally in Adobe's stock price, especially if they put out another stellar earnings report. Within the release, a key metric for investors to watch closely is the company's subscription revenue, a metric that Adobe has consistently positively surprised on. Furthermore, analysts have been silent for the quarter to be reported, with estimates suggesting a year-over-year growth on bottom line and top line. And it could be a good idea from this article to do a call option on Adobe. Now, you definitely want to do your own research or just join the close friends list to see exactly what I'm buying, when I'm buying, if Monday morning I'm buying a call on Adobe, or maybe even Tuesday afternoon, because remember, Adobe is reporting after hours on Wednesday. Okay, so let's talk about the next stock, which is FedEx, ticker symbol FDX, at $200 per share. They were down 2.6% on Friday most recently, and in the past 3 months, they are up 17%, outpacing the stock market as a whole. And in the last year, they're still down 8%, with 1-year lows closer to $142 per share in September. Okay, now if we look at a 5-year chart, they're pretty average price for the last 5 years. But for long term, I really want to be buying FedEx under $155 per share. I think there's a good chance that shipping and FedEx could get that low again and have a sell-off in the sector as a whole. Now, UPS, their biggest competitor, is reporting next month, just something to keep in mind. We see this article titled "E-commerce demand has slowed. FedEx results will show us where it stands now." Okay, so this could be a better stock to be reactive to. Wall Street will be zeroed in on FedEx cost-cutting plans. On package delivering company FedEx reports, it's going to be very, very important on Thursday, because the results won't just be about the state of shipping. They'll be about the state of people and business as a whole that still want it after e-commerce demand cooled off last year, when the pandemic came to a slow and people went back to their normal route of business. And FedEx itself embarked on a quest to slash billions in cost. The company will report alongside several other retailers and software names, which we kind of already went over. FedEx in recent months have called out a weaker demand environment and an e-commerce reset that has weighed on sales. Even so, the company has raised shipping prices this year and is still extracting more money out of each delivery, helped by extra fees that offset fuel costs. Even as shipping volume fades, as a part of effort to save money, FedEx has grounded jets and cut back on flights and grounded service routes, and closed some locations that offer copying and printing services. So this is definitely a risky earnings, because it very well can be bad. Obviously, they're saying there's the weakest demand environment and an e-commerce reset. However, they're slashing prices to try to save billions through those different methods that we just went over. So yes, they still could miss on their revenue, but they could beat on their bottom line, their net income, if they're doing everything they can to get more money out of each sale and also save as much money as they can. As FedEx tries to lower expenses, investors ever focused on profits have come around. Shares have rebounded since September, which were under 150 in September. Top analyst said she will be focusing on signs of progression surrounding FedEx cost-cutting campaign, okay, which if proven successful could be a beat on their EPS. She said that she also will be looking for updates on where volume pricing and e-commerce demand were headed. As the economy has reopened, we have seen a decline in online ordering, she said. We are wondering if there has been any change in that outlook. Okay, so if they say the reset is here and demand is starting to pick back up for e-commerce and online sales, that could also be a really good thing for the stock. Other analysts said that they will also be watching for any specifics on FedEx efforts to cut costs. Part of our constructive view on FedEx is the catalyst path through and beyond earnings, so they also want to see good guidance and just where the sector as a whole is going to be headed, because FedEx is a leader and an announcer in that space, just like Amazon is, just like Facebook is, just like Snapchat is. When Snapchat reports earnings, the whole industry looks at that sector for advertising growth or advertising slowdown. So this is the same thing with shipping. They're looking for a shipping slowdown or e-commerce slowdown or a speed up. While we think meeting / beating estimates is key to the story in order to build our credibility, we also see a detailed walkthrough for the next $4 billion of cost reductions, potentially some preview / pull forward of Network 2.0 as further positive catalysts in the near term. So overall, there is some great stocks to be playing this week for earnings. I think that FedEx is more of a 50-50. It could go down or it could go up on their earnings release. Overall, I hope that FedEx goes closer to $155 per share, $145 per share, so that way I can buy some more for long-term investing. But if you want to see exactly what calls and what puts I'm buying this week ahead of earnings, go ahead and message me on the close friends list. We're doing option trading 3 to 5 times or more a week, and we're having major success. Now over 800 positive testimonials and over 2,000 students signed up total. So go ahead, message me on Instagram, become the next success story. Here we see a bunch of positive results, up 188%. $800 gains. Tesla puts paid us big time. Easy money coming through the group every single week. So reach out to me here. 2023 is definitely your year for stock market success, and beginners are welcome. Also, I have programs developed for beginners to take someone that knows nothing and develop them into a more advanced trader in less than 90 days. Thank you guys for all the love and support. Make sure you share this video with a friend because you know it was an absolute banger. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.